Good evening. My name is Cordia, and this is Insurance Talk Tuesday with CCI Protection. So, our mission here is to serve, to educate, and to protect. So, we are releasing some insurance coverage information every week to just kind of discuss coverage, talk about what is and isn't covered in the specifics. So, last couple weeks we talked about the personal auto policy, and this week we are going to jump into the homeowners insurance policy. So we're doing the property side. I will talk about a little bit today just about the dwelling protection. We can get into a lot of coverage when it comes to the homeowners. It is a very complex policy. We're going to keep it simple today and just kind of scratch the surface and get into it. But let's jump right into the coverage. All right, let's talk coverage. So the dwelling protection the dwelling coverage is the amount of insurance that it would take to rebuild your home, right? So, a really big thing to say when we're talking about this number is that there is a difference between the market value and the replacement cost, right? So, market value is what can I sell this house for in the current market? Right, and right now there's definitely a difference because the numbers are crazy in the market right now. The market value, what can I currently sell this home for in this market, right? Replacement cost doesn't really evaluate the market. That's not what we're looking at. Replacement cost on the insurance side is if this home were completely destroyed, what would it take to rebuild it as is? And so, replacement cost, market value, two completely different things. The insurance company wants to know if this home is completely destroyed, God forbid, and we have to build it brick by brick with all the materials that it takes to rebuild this home, what would it take to build that? Right? And so when we're looking at market value, what can I sell this house for? It doesn't look at the same thing that replacement costs look at, which is, hey, what is the price of bricks? What is the price of trees and logs and the things that it takes to rebuild a home? Is literally looking in the current, system and saying, hey, how much is hardwood right now? How much is that trim that she has on the house right now? And if this home were completely destroyed, how much would it take to rebuild a home exactly the way that it is? And that is where we get the replacement cost number from, which is why it is often much different than what can I sell this house for in the current market. So, what your appraisal district or what the market has it listed as is going to be different than the replacement cost, which is again, God forbid this home is completely destroyed. What would it take to rebuild it exactly the way it is? Which again is what insurance is all about. It's about making you whole again, putting you back in the position where you were before that thing happened. So you're not having to take steps back. You're able to come right back in and continue building and creating the life that you want. Right. So that is replacement cost versus market value, but it's not really getting into the insurance of it, right? So another thing that I will say about the dwelling protection or the dwelling coverage, the amount that it will take to rebuild your home as is, God forbid a total loss situation, is that there are two different evaluations you can have on it, right? It is going to be replacement costs, which is what we were just kind of talking about, or it can be evaluated actual cash value. All right. So it is very, very, very important to know the evaluation of your homeowner's policy. Is it an actual cash value policy or is it a replacement cost policy? Well, what is the difference, right? So replacement cost is typically what you see on homeowners policies. So it's going to give you the value of it. It's not going to take into account depreciation. So when we're looking at a home purchased 20 years ago, we're going to replace the home. What does it take to rebuild it as it is? Versus an actual cash value policy, we're going to look at what will it take to replace the home minus depreciation, right? So minus the fact that it has been depreciating for 20 years, right? So those are the two types of policies that you have. When we talked about auto, we talked about the fact that it was an actual cash value policy. As soon as you drive off the lot, it begins to depreciate. And at the time of the claim, depreciation is going to be considered. Well, when it comes to property policies, you have options. It's not necessarily just an actual cash value policy. You most likely are going to have a replacement cost policy. If you are looking for savings, then that may take you into the area of actual cash value. I would not recommend. Goodness, that depreciation can definitely hit. And so having a replacement cost policy is really important because those dollars are going to make a huge difference at the time of the claim, whether or not they're taking out money for depreciation. So you want to have that replacement cost policy. You want to be paid the value of it. You don't want to have that depreciation taken out at the time of the claim, and you don't want that kind of evaluation, right? Now, and it can depend. So if it's a homeowners, I would strongly urge you to have a replacement cost policy. If you just have a little rent house, there are some situations, maybe a house that you're flipping, there are some situations where an actual cash value policy makes sense, but it's a conversation that we need to have. Let's make sure you have the right coverage in place. Okay, so I'm going to sum it up there. We'll jump into some additional coverages on the homeowners policy next week. But just to kind of get us started, we want to know, hey, what is my dwelling protection, right? What's my dwelling coverage? And what is the difference in the market value and the replacement cost on my insurance policy, right? So we know that. Boom, market value, what can I sell the house for in this current market? Replacement cost, God forbid it's completely destroyed. What will it take to rebuild it as is, right? And then we also wanted to know the difference between a replacement cost policy and an actual cash value policy, right? So actual cash value is going to give you replacement cost minus depreciation. So it is going to subtract for that depreciation. Replacement cost policy is going to give you what will it take to rebuild it as is, and it's not going to subtract for that depreciation for you. All right, so we know market value versus replacement cost, and we know actual cash value versus replacement cost. And next week we will dive into some additional coverage within that homeowners policy. All right. You guys have a good evening. I look forward to speaking with you soon.